It has been a wild November with record-breaking government shutdown of over 40 days, Supreme Court ruling on tariffs, and of course, issues around the globe that still continue and persist on. Extreme fear in the market, but this is a very strong buying opportunity for anyone who knows how to invest in dollar cost average. Strap in, sit tight, because I'm going to explain to you guys what's going on in the market, what caused the extreme fear, and I'm also going to explain to you guys the manipulations that are going on and why this market is primed and ready to start turning around right now, and what has actually caused the delay in this turnaround. So I'm going to explain all this to you guys in this video. If you guys are confused by anything or you don't understand what I'm talking about in some of these technical analysis that I go over, I would love to help you guys out. If you want to make the profits that you see my students making right there on the screen, I would love to help you achieve the same goals. Even though the market is going down, my students know how to dollar cost average and prime themselves to make returns even in a down market, and when the market goes up, collect even more profits. I would love to help you guys do the same thing. Link to get started with Discord and coaching is below. Let's dive into today's video and go over what is going on in the market right now. Don't skip any part of this video, because somewhere in the video, I'm going to show you specifically how to gauge the market tomorrow morning, and you're going to be able to do it with a specific strategy tonight and gauge the strength of the US economy as well. And this is almost guaranteed to be 100% accurate every single Sunday. In fact, it's virtually guaranteed to show you what's happening tomorrow morning, and you're going to be able to do it 12 to 16 hours in advance tonight in the overnight hours. I'm going to show you that strategy as well. We also have to think about Nvidia's earnings this week. It carries the weight on its shoulders of the tech market and the tech bubble. So Michael Blurry Burry, I'm always going to call him Michael Blurry for his blurred vision and his manipulation tactics that he's been fear-mongering, is going to be proven wrong if Nvidia crushes earnings, and it will bring the tech market up with it. So that is coming up this week. So you got to keep your eye on Nvidia. This is very important week for the tech market because of Nvidia and Nvidia's earnings. And Nvidia hasn't missed earnings but one time in like almost 10 years. So it's unlikely they will miss earnings. So we'll see how much they crush earnings by, because that is the expected outcome. So there's a cool off period anytime anyone sells or anyone panics or gets out of a stock. It takes time to build the confluence back up. And with the government shut down, a lot of foreign investors, big hedge funds, institutions are selling off. They're liquidating and exiting positions. We also have Michael Blurry Burry, who in my opinion is not very intelligent when it comes to the market, very unintelligent in a lot of ways, creating a lot of fear, saying that the AI bubble is going to burst and that it's overvalued. But that's incorrect, because the price to sales ratio on Meta alone illustrates that they are heavily undervalued, and they have a price to sales that has at least 50 to 200% more room, depending on the market breadth and of course the market growth and where the sector goes. But even right now, currently, Meta has a 50% growth possibility based on their price to sales, which shows that Meta is heavily undervalued at the current price. And they had two analyst ratings recently upgrading them to the mid 800s and now 900, which shows I'm not alone in the 50% upgrade. That is where Meta is valued at. But there's a lot of extreme fear going on. And when everyone's selling off to extreme fear, you're also getting that notion of, oh my God, I don't know what I'm going to do. This market's not safe. So you're not going to get back in. Even though it's stabilizing right now, and it started stabilizing, the government reopened, there's going to be days, if not a few weeks, where things go up slowly, stabilize before there's, confluence to get back into the market. And also there's the manipulation going on where they're forcing the stocks down and trying to fry Meta calls for November 21st so they can get people to sell off Meta quicker and get the price as low as possible to get in, because with interest rates looming as a possible cut in January, February, and March, big institutions are bringing money from the sidelines into the stock market, and they want to be in for this ride because it's going to be big, even bigger than it was last May. And they know this is their pretty much last opportunity to do it before the next big run happens. So they're trying to drive these prices down. And this can be very easily seen on the charts when you look at stocks like Microsoft, currently sitting at the price it was before all of this mess and fiasco started weeks ago. Literally 510, 511 on Friday. Yeah, Meta's $140 lower, but most other stocks are higher. It's only stocks pertaining to Meta that are tied to Meta. So there's a lot going on there. And also Meta lost a key player in their company. That is not helping them out very much either. It's definitely not doing them any favors. Not sure how much this is really weighing in on them, all things considered, going on in the market as we currently speak. And with all of this fear going on, there's also the Supreme Court ruling on tariffs, but we won't get that data anytime soon. It could be as late as June of 26 before the end of the term before we get that data. Will that happen? I don't know. It's unlikely it would be that long, but we probably won't see that data for a while. Maybe it'll be a week, maybe 2 weeks, 3, 3, a month, who knows? At this point in time, we don't really have a concrete answer for that. As you can see here, we have the VIX coming up, coming back down, and coming back up in a sine wave pattern, almost like I showed you guys it would be, but it should be tapering off now this week because data last week was pretty decent. And another thing that everyone was fearful of is that the government was hiding the data. That's why they were shut down or using it as an excuse. And they were basically holding back real data numbers and that the data was going to be very bad. But it wasn't very bad. In fact, it was decently good. As you can see on the VIX, we got housing starts, building permits, which are lagging indicators, which have been getting better and better every report. We have this coming out on the 19th, which is Wednesday. So no data till Wednesday. And then we've got the FOMC minutes, which is going to be on Thursday on the 19th. Then we have FOMC minutes on Wednesday as well. And then, of course, on Thursday, we have existing home sales. So the data this week is very important, but later on in the week. So Monday should be a good day. And I'll show you somewhere in this video how to gauge what is likely to happen tomorrow, almost guaranteed to happen tomorrow. So sit tight. We will get to that. So when you're gauging the VIX, you have to understand that you have highs and lows in the VIX, just like every other stock. You have this big peak here, 2 big peaks in a row, and then it dies out. Then you got a big peak, another double peak, and then it comes down. When we look at this chart for the VIX overall for the last year, almost the last year, you'll see that if we draw a line here just to show the trend, that the VIX is trending down and it lines up right here with January. So as we end the year, it shows that volatility is tapering off and that the market will likely be stronger going into the end of the year, which lines up with Tom Lee's expectations for the SPY running to 720. And typically when you run a line like this, you're showing the divergence, you're showing the actual reaction to what's happened, the action, so to speak. You're showing on a graph of the highs and lows of the VIX. And you can see every time it goes up, it makes lower highs and a double peak on the VIX. This double peak on the VIX right here shows that the extreme fear that is happening in the market has rejected the volatility. This is a very particular instance in the VIX that I want to point out. On a 1-hour chart, we have a double top peak, and on the 4-hour chart, we have a double top peak. This pretty much, not a guarantee, but pretty much illustrates to me that the VIX is exhausted, that we are exhausted with volatility. We've spent all this time up here and it's going to cool off. And as the VIX cools off this week, as you can see, if I was to draw a little bit of the VIX cooling off like this, and then it starts to kind of consolidate, where's the cool down period? Thursday the 20th, right around this data, which is the end of the week, which means next week could be something like this. We could have a nice trend down, meaning the stock market runs next week. And this is what I've been telling my students in the Discord, that the market very well is likely to run next week. They're going to fry Meta's calls this week. They're going to fry everything this week. That's what they're going to do. This is what happens. The third week of the month, we got data. They're frying these options. They force the market low. The buying now begins. This is a buyer's market now. This is where everything is on sale. And as we go into the holiday season, it's expected the holiday season brings joy. People like to shop, so they're going to be spending money. It's more relaxed. People are less stressed out. Things are just overall better most of the time. So the market will do better, most likely going to the last week of November and the first 3 weeks of December. After Christmas Day, that short duration between Christmas and New Year's when the market is open, there's a lot of selling near the end of that time. The day before New Year's Eve, day before that, there's usually some selling. And the first week of January and second week of January is really rough because tax loss harvesting can happen up until January 20th, I believe, or 21st. So there's that to think about. First 3 weeks of January is a buying opportunity. Wait for the markets to come down, and then you buy at a discount. But all things considered, the market has already had its share of selling and fear. It's likely that probably won't happen as much as normal. We might actually have a pretty strong January because of this. So that's something else to think about as well when we're looking at this VIX and understanding the market. A lot of investors are worried about ARM, but ARM is fine. They crushed earnings just like other tech stocks did, and it's sitting at the previous low back in September. All the fear has driven it down, but it is a buying opportunity because ARM is carrying an undervalued rating right now. They have analyst ratings of upwards of $200, even $250. Another good stock to own. Oracle, same thing. They're going to oversee the TikTok deal. There's a lot of debt that Oracle has, but on top of that, their overall analyst rating is for $300 to $400 on average. And there are some analyst ratings that are in the mid to high twos. And right now, Oracle is trading low twos. So there's still a lot of room. When we look at their financials, though, they bring in a lot of money, but their EBITDA is also strong. even though they're profitable with net income, is the balance sheet. When we look at their debts, their equity is 24 billion. They have enough assets to cover, but they do have a lot of total debt. Now that has been a problem for investors to swallow. But when we look at their cash from operation activities, it's positive. But their cash flow is struggling right now, and it's been struggling over the last 2 quarters. So we'll see how that changes going forward. Palantir didn't pull back, all things considered, with the market and how much the market pulled back. Palantir has done very, very well. This stock is holding pretty strong, even stronger than I thought it would. Very strong investment. So if you've been holding Palantir through all of this government shutdown, then you're not doing too bad. Even if you bought the top, you're out $30, which is a decent amount, but most people probably bought in somewhere along here. So you're fairly in the profit or break even maybe, but not too bad at all. Palantir has held its own and been very strong. Navitas has worked its way up all the way back down a second time. This would have been an opportunity for you guys to dollar cost average again. At this point in time, you should have a dollar cost average of around $9 or less. If you do not, then you're doing it wrong. You should not be involved in Navitas at all, because you either can't afford a dollar cost average or you don't know how, and therefore you are in trouble. Now, this doesn't mean that the stock won't go up going forward and you won't make money. It just means right now you're going to be heavily in the red or partially in the red, where you could be in the green or break even or very, very small amount in the red, because right now dollar cost averaging here means you could have gotten out at a profit right there. In fact, I told you in my previous video that your break even would be about 1073 or 980, and the stock ran at 1077 last Monday. Therefore, if you had a dollar cost average right here, you'd have gotten out there at a profit. So if you're in the red right now on Navitas, it's because you didn't follow the guidance. And that's what I've been explaining and how to do it. Looking at Shopify, this is another stock that is poised to run with an upgrade analyst rating into the 200 plus range, and some analyst ratings much higher than that. Shopify crushed earnings 2 quarters in a row. Their next earnings is going to encompass holiday season, which means Shopify is likely to run a lot between now and February. December, January is going to be pretty strong for Shopify as it's holiday season. So you definitely want to keep your eye at least on Shopify. As we can see, even with all of the fear in the market, Microsoft is, all things considered, not really down that much. Considering back in middle of October, the price was sitting around 512, maybe even as low as 509. We're right back there again. Came up, came down, came back up. Law of averages right in between. Dividends are coming up this Thursday, so the stock is likely to move up. Dividend yield is not very high, so I don't expect exuberant amount of buying. But with the government reopening and the fear dwindling down and the VIX also coming down, I anticipate that as we work our way into data this week, that Microsoft could break into this gap right here, which could put Microsoft in the 518 to 520 range. I don't see that as being too far off from the possibilities. Heck, it may even run more than that, but I'm being a little bit more on the conservative side of things. Looking at Meta, it has been beat up. The only reason why Meta missed 84% on this earnings is because of the tax hit that they opted to take at a discounted rate. You make a lot of money, you pay a lot of taxes. When you look at this, one thing we know about a good company, Meta's a good company, and one thing we know is that when a company is beat up really, really bad, is the time to buy it. Right now is a buying opportunity. Tom Lee has said it. Everyone has said this about Meta. Now is a buying opportunity. It's bouncing on the 609 range on this chart and 631 a lot. It's been bouncing right here at the top of 609 and 600. This is high fives, low sixes, and all the support. We could see Meta open Monday a little low into 590, 580 range, and then it goes back up, or it just straight goes up. But right now, it's strong support. Anything can happen in the market, but Meta's been beaten up so much. So we can see how Meta has slowed down quite a bit. Big drop right here, and then it does this number like this. And then you'll kind of see this, and then it starts moving its way back up, which could be into, like I said, next week. Say this is next week. And as we go into end of month, Meta starts running back up to 685. This is exactly what happens to a lot of stocks. This could take 2 weeks. It could take 3 weeks. We don't know yet. But what I do know is you can see the drop has completely slowed down. We're at that point now where, the lower lows have slowed down enough to it's almost consolidating since November 6th. 3 weeks of consolidating, up, down, up, down, up, down. Very small movement to the downside. And that pretty much follows this path right here, where it could come up a little bit like this. Then you could see this number, and this is where Meta starts to recover. This is like a typical recovery, but it still puts the stock somewhere end of month going through December before we have a nice move up on Meta. The SPY is a very good way to gauge the market. And anytime you see consolidation like this and then a run, typically goes back. And it did that. Come up, come back, come up. And as we see this get smaller and smaller, then it'll start to run up again. This is just the typical movement. And the SPY shows that it's still fairly strong. In fact, considering everything that's happened, it shows great resilience. So the market overall as a whole is not as bad as you may think it is. It's just certain stocks like SE, for example, that has come all the way down since all of this madness, but carries a 1-year rating of $200 almost. So this stock's going to also have a very strong likelihood of upward potential. And you can see where this line is. The price is right here. It could sink into the 130s and then run. But we've also seen a considerable slowdown here, a little bit more of a drop. It came back up. I think the consolidating range is mid 130s, mid 140s across before it runs with the rest of the market. But they did crush earnings recently, so definitely in a stronger position than they were before. Nebius, another sell-off, but they're tied to Meta and Microsoft. And you can see that big dip here. It ran back up, then another dip. And based on where it was previously, the top would have been 76. So we could see Nebius in the $80 range this week, 78 to 80, before it primes up and recovers with the market. Under a market recovery over the next couple of months, Nebius will likely make its way back into the 110 range. So it's really just dependent on the market, the tariffs, everything going on. But like I said, double top peak on IV on the VIX shows that the market is tired of being tired. And that's the overall notion. But a lot of things run on Nvidia. Like I said, Nvidia is a key player. If earnings absolutely crush on Wednesday, it's going to bring the whole tech market with it, including Meta, Microsoft, Google, Apple, Oracle, ARM, Nebius. They're all going up with it. If Nvidia misses, it's going to be a rough week, very rough. It is unlikely that Nvidia will miss. I don't think Nvidia's missed earnings ever. Maybe like one time, maybe once. Yeah, I was right. One time in 2022. They didn't miss on revenue. It was an EPS. Maybe it was a tax hit. Who knows? I don't know what it was, but their overall revenue didn't miss. So if we go back, Nvidia hasn't missed earnings. Well, it doesn't go back that far, but Nvidia has missed earnings once in 7 or 8 years. So yeah, it's unlikely they'll miss earnings. If they miss earnings, that'd just make it even worse. But, you know, I'm not saying that's going to happen. I think they're going to hit hard. It's going to crush and the market's going to go up with it. So that's something to really keep your eye on. Nvidia is still the leader, the echelon, the pinnacle, the pioneer of the tech market. So this bubble that we think is bursting, Nvidia is going to prove Michael Burry wrong. And I call him that intentionally. He's going to be Michael Burry from now on, not Michael Burry. And when Nvidia crushes earnings, if they can crush by enough, that'll set the market and set the stage for a nice rally on Nvidia. And of course, the entire AI and tech sector as well. If you guys want to see a video on stocks and ETFs and mutual funds that you can trade in your brokerage in a down market to make money, leave your comment below. I would love to help you guys with that as well. Let me know if it's something you guys want to see. I told you guys I was going to talk about a strategy for you to gauge the market tonight. What was almost guaranteed to happen tomorrow. We're about to do that right now. But if all of this technical analysis and the fear and the greed and all of this is confusing you, like it does all of my students before they join, I would love to help you guys out. I have a full 6-hour training course, an Ask Corey section where you can ask me questions 24/7, 2 coaching calls a week while the market is open, 45 minutes to an hour twice a week, and one-on-one coaching and my trades, whether the market's down or up, doesn't matter. We have hedge trades, we have bear trades, bull trades, whatever you're looking to do as you learn and grow your portfolio, we have it in the Discord. I would love to help you grow your portfolio. The link to get started is below if you want to make the profits that you're seeing on the screen right here. But don't just take my word for it. Let's take a listen to what my student Josh had to say. How you doing, Josh?
Hey, Corey. Good to see you again. Thanks for having me.
Of course, absolutely. And a lot of people have joined the Discord over the past year and done so well. And the truth is, you're the inspiration for all of them joining, most of them, and growing their portfolios. But you were my first student from 300,000 to 800,000. but you hit some speed bumps psychologically, and we had to crack that.
Started just like everyone else. I came across Corey's videos pretty early on. I was just really impressed with your approach to everything. I've actually explored other ones before as well, and a lot of them don't work. And so I can honestly say from the results themselves as well, but just how much you've developed me through this time period, helping me come from someone who knew very little about options trading to someone who now has that foundation and the skill set and also the psychology and mindset far surpassed what I originally set out to do. I was a victim of the market, and now I feel very much as I'm someone who's in the market, trading the market.
How does it feel to be a part of the Millionaires Club?
Honestly, it took me a minute to just understand what it meant. It was one of those dream goals that you have as anyone setting out to start to trade and do this. But nothing really changes, to be honest with you. I think if anything, now I'm really excited to accomplish my goal. Going forward, it just becomes now let's set a new goal. It feels really good to have a skill set and have a goal and be able to accomplish it. I think everyone should take masterclass or advanced training, elite coaching with Corey. I'm really excited to keep contributing to Corey's community, joining our calls on the weekly basis, and then also being live in the Discord. I get a lot of energy out of it. We have a really great group, and it's all because of Corey. Anyone can do this. I did not expect to be someone who could become a millionaire trader. The reason why you want to work with Corey as opposed to someone else is because he truly cares. He's just as invested in you, in building your skill set and training you to become a very good and profitable trader. He actually builds a serious program. He adapts to all different types of traders, no matter what they are, whatever their own personal goals are, whether you're in the retirement stage or you're someone that's really trying to build wealth and actually become like an active trader yourself. Corey's community is awesome. We have fun together. We also share ideas and trade and that sort of thing, trading overall. It's about making money.
So you heard my student Josh had to say, if you want this to be your success story, take action now and let me show you what you're doing wrong in your portfolio so we can build you a system that works specifically for you and you can achieve your goals in the stock market just like my students are doing right now. I have dozens and dozens of students over the last year that have went on to retire, travel the world, and do the things they want to do while making money in the stock market, just like Josh, and this could be you. The link to get started is below. I look forward to seeing you very soon. Remember, what you put off today for tomorrow, someone else put off yesterday for today. While there is pain in the market right now is time to grow, learn, and buy cheap at the bottom while the stocks are getting beat up. And I'm going to show you exactly how to do that. So I told you guys I would show you how to gauge the market tonight, Sunday, going into Monday before it even happens. And it's almost guaranteed. It's like 99% accurate. I'm going to show you guys you want to pull up the MES, which is the Micro Mini SP 500, because the stock market opens up in Japan and China at 8 p.m. and 9 p.m. tonight, and it opens up in Europe at 2 a.m. So all of this is happening in the overnight hours. Let me show you what's going on. You'll be able to gauge this tonight, 6 p.m. Eastern, 3 p.m. Pacific. We can see here there's a big gap up on the chart here on Sunday at 6 p.m. on October 26th. It gapped up. If we go look at Microsoft on the 26th, it's right here. There you go. Monday the 27th at 4 a.m. Microsoft gapped up. We go back and look at Meta. Right here on Meta, Monday, October 27th, 4 a.m. It gapped right up. We look at the SPY right here. It gapped up on the 27th as well. So pretty much everything that happens in the MES happens Monday morning if you're gauging it in the overnight hours. So if the MES gaps up like this, then this low right here, this recent closure on Friday, becomes support for it to go up. If it gaps down, then it's likely that this becomes resistance and we have that number and can eventually recover possibly. But this will just give you a short-term scope into the stock market. It is likely, based on the fact that the government's now reopened, people have had the weekend to rethink, the market has settled down over the weekend, things are much better than they were last week. We have data coming out this week. Last week's data was better than we thought. People could digest things. They say you're going to have a better gauge on life when you sleep on it, right? If you're trying to do something, you're trying to make a decision, you want to go to bed, rest, relax, wake up, R&R, bam, you make a decision. That is the likelihood over the weekend. So based on the sentiment, the psychology, the market is, and everything else, we could see a nice healthy gap up and the market move up maybe somewhere in this range. But tonight, there's a very good chance that we gap this line right here. So we could be up 68.12, 68.30, somewhere in this box, maybe higher, but I see that being a very strong potential. It could consolidate and do nothing, but I feel like that's a very good possibility because of the way psychology works and the way everything worked over the weekend. I'm also going to show you how to gauge the strength of the U.S. economy too. You want to be looking at a DXY, which shows you the U.S. dollar. Now, granted, the U.S. dollar was very high back here in 2025 in May, came down, came back up, came down, now came back up, making higher lows, higher highs. See, if we were to use a reactionary measure tool right here, this would be the downtrend. Even if we were to do this downtrend right here, it would have broken out. And it's quite obvious when you look at this because we're making lower lows and then we're making higher lows and higher highs. So the US dollar is now working its way back up out of this downtrend. So when you look at this, it could just be a mini downtrend or a mini uptrend breaking out of the downtrend. But right now, there's a lot of resistance at $100. We're back almost on par. So like I said, we've got data this week. If the data this week is good, stock market looks like it's on the divergence of recovery. Divergent recovery, meaning that it's consolidating on a dollar while the data is coming out. The VIX has got a double top peak. All of this is diverging this week in the third week of options. So it's going to be a very, very important week to keep your eye on because the market is likely to go up near the end of this week and next week. Now, we'll likely go up tomorrow, but it'll go up, pull back a little bit, consolidate, maybe go up a little bit more. But next week is where I really expect the market to start moving, especially if data is good this week. But they're trying to fry these options, and it's the third week of options. So you got to think about the psychology effect of what's happening in the market like that. If anything I said in this video confused you, maybe you just don't know where to begin. Like I said, I would love to help you grow your portfolio to make the profits that you're seeing on the screen right now. Even in a downtrend market, I would love to show you what you're doing wrong. Take action to grow your portfolio and show you which stocks are good and show you guys how to gauge this on your own. This is a time to be educated and buying slowly and grabbing what you can at a discount because when the market moves, you're going to be in the profits. If you want to make those profits you're seeing on the screen, the link to get started in Discord is below. I look forward to seeing you on the next video and in the Discord real soon. One love, fam.